Hi, this is Denise Sanyurt. I work as a commercial real estate investment advisor, and welcome to my Location Advisor Facebook page live event. Before we start, let's first discuss house rules. We are going to live post this event at my Location Advisor Facebook page and Zoom platform. Event will take around 30 minutes. Feel free to post your questions at the comment section under this post. If you join us at the Zoom platform, then you may share your questions through chat option. At the end of the presentation, we will do our best to respond all your questions. If we cannot, if you leave with us your contact details, we will respond them after the event. Let's start. Today, we are going to talk about residential real estate financing during COVID-19 pandemic. We have Ryan Obermeyer, Vice President of Mortgage Lending at Guaranteed Rate Affinity today. Ryan has 15 plus years of experience in residential real estate financing. He is also our trusted source to get our residential deals done. Because of the social distancing, we know that we cannot set up in-person meetings. That's why we decided to organize this event to give you a chance to ask your questions about home financing. Ryan, welcome to our My Location Advisor Facebook Live meeting.
Thank you. Nice to be here.
So Ryan, we are going through very tough times, and in fact, it is unprecedented. The world we know has changed completely since the pandemic started. Have you ever experienced anything like this before? How do you meet with your clients now?
Yeah, I mean, you know, it's tough to say you've experienced anything quite like this. I would say the closest I have seen is a financial crisis back in 2008. Mm-hmm. You know, and it's dealing with the same kind of things that happened then. The huge swings in the market, the new challenges with the mortgages, the underwriting, you know, qualifying clients. It kind of stems to the same issues, same basics as then. You know, but we just fight through it and we figure out a way to get things done.
Yeah, I mean, these are tough times. I know we are trying to work through this. I see that you are joining us through your home. I'm joining through
Right.
home. I have this cool background of Coldwell Banker commercial. We try to make the best out of what we have. So for the sake of the time of our audience, let's start with our questions. How has COVID-19 changed the application process, closing process,
so
financing?
Yeah, I mean, I think that some of the things that has changed, we were slowly getting there in the way of eventually at one point, everything's going to be an e-close transaction. I mean, to where you can go start to finish without ever seeing someone. And closing, just like we're talking now at our homes, you'll be able to close at home with someone on the other side. So that's kind of the biggest thing with regards to, you know, doing the application, you know, talking to the client, to, you know, getting them pre-approved, to collecting the documents. You know, we have processes and procedures from start to finish to where we don't actually ever have to meet with the client. I would say that most of the clients, most of the loans I do, that I never actually end up meeting them. And if I do, it's at the closing table. You know, so we have some processes in place. Is like we have a system called Flash Close. And with that, and a normal closing, you have, you know, I mean, it's 45 minutes to an hour to sign the documents and review all the documents. With Flash Close, what we can do is send the package to the client ahead of time, and they can review everything the day before. The day of closing, they actually log onto the system and will e-sign probably 75% of the package. And when it comes to the closing table that day, they have 6 or 7 documents to sign. And usually there's no questions because they've had time to review all the information, and, you know, it just saves a lot of time. Now, we also have an option to do a full e-close in certain situations. Now, not all loans we can do that on, but if it's something that has to be done, that's something we can try to do ahead of time.
I know I did my refinancing a couple of months ago with you.
Yes.
About my, you helped me refinance my home, and we signed a lot of documents electronically. And when we came to your office, we had just a couple of papers signed, needed to be signed. So now you're saying this even more evolved. You can do everything online.
Yeah, I mean, I would say at least the flash close, that probably at least 90% of our closings involve the flash close. The e-close, that's still something that's evolving. We are doing more and more of them, but I think that is a technology that's gonna, keep advancing, keep getting easier, just like this flash close option. It's just going to be a matter of time.
That's very creative. That's very creative. Thank you so much for sharing this with us. Okay, my next question. Is there any change in the number of loan applications since the beginning of the shutdown?
Yeah, so
is it down, up? How is it?
In total applications, it's by far up. May not be for the best of reasons. And normally that is, with COVID, we had such huge swings with the market, and the market really dropped there for a while. With that, our rates went down as well. So if you're asking about total applications with purchase and refinance, yeah, the applications have definitely gone up. I don't think that there's probably any lender out there that has ever been this busy with refinances, which sometimes is a struggle, but with doing the purchases as well. But we do prioritize the purchase loans and getting them done first. We just had a call the other day, and I believe that at least for us, our purchase transactions are up 50% from last month, from April.
Wow.
So
really good news.
Yeah. So, I mean, if things keep continuing in that direction, I think that, our summer market will just be starting up here.
Yeah, I think I see those numbers too. What's your advice for the first time home buyers preparing to purchase? Hold on, I have someone trying to come in. Awesome. We have new people joining us at the event. And okay, back to question. What is your advice for the first-time home buyers preparing to purchase their first home? Because they're inexperienced, I will really like to help them out with this information. Please go ahead and help us.
Yeah, I mean, I would say, again, the most important thing is to get pre-approved up front. As I'm sure you've dealt with this, and I have plenty of times, is that you have the client who just wants to get a rough idea of what the numbers would look like, or, what they may approve for. And, they never take the step of getting pre-approved. And then all of a sudden they call you up and they find the home of their dreams, and they need that letter right away. And that's when you find out maybe the credit score is not where they thought it was, or there was a collection that we didn't know about. So again, I'd say at least, even if they're looking 6 months down the road, if we at least get the application and do the pre-approval ahead of time, we can kind of, prevent some of those issues to come up before closing. We can take care of them beforehand. And credit score is such a big deal with interest rates. If someone is sitting at a 719 or 725, and maybe we can look at the credit score and say, hey, if you do this ABC, you're going to get to that next tier on the credit score.
Yeah.
And that could potentially give you a lower rate and save you tens of thousands of dollars over the life of the loan. So again, I just think the biggest thing someone starting out is to find someone they trust and get along with, but also to go through the full process up front.
Yeah, I mean, I have that experience with some of the clients. They said they're going to get a pre-approved, especially in this market, while we have so many, so little listings on the market. So you need to be really ready to purchase something when you find the property you like.
Right.
And you want to know what's your budget actually. My first question to my clients is that, what is your budget? How much you can afford? And Sometimes they come with some numbers there that which are lower than they can actually borrow. And sometimes they come up with some crazy numbers which they cannot afford. So it is always, I suggest my clients that talk to the lender as soon as possible. Shop for a lender. Find out how much you can afford. And if there is a problem with your credit score, he can or she can help you fix that, right?
Yeah, and it is helpful for us too. I mean, when I talk to someone, usually they're coming to me to say, how much am I pre-approved for? How much can I qualify for? But I always want them to tell me what they're looking for as far as the price. Because again, like you said, I mean, they may be way up here and their qualification is far below, but at least if you get an idea of what they're looking for, it's easy to work backwards from that number to just see if there's a way to get to where they want to be and help them out.
So my next question, can you pre-approve a client without meeting them with them face to face? I know we are not allowed to go out and meet with our clients in person without a 6 feet distance. So it's making it difficult for everybody. So how do you handle that? Can you pre-approve them?
Yeah, so in that sense, I think that my job as a lender is quite a bit easier than yours as an agent. Just because so much of what we can do can be all online or on the phone. So really, again, we touched on this before, but we can take a client, talk to them from start to finish without ever meeting with them. I mean, we have the technology and the processes and everything in place that, if they want to meet, we can definitely set that up, or we can do like what we're doing here. I've had Zoom meetings with clients before if they want to meet. But yeah, I mean, doing something all online or without ever being face to face, yeah, there's no problem with that.
What are the documents you're asking them provide you during the pre-approval? Does it take too much information?
No, I mean, so obviously every document can then be more documents we need down the road once we review them. But for the most part, we kind of follow a 2-2-2 rule, which is 2 pay stubs, 2 bank statements, and 2 W-2s. So if someone's self-employed, that changes with needing tax returns and possibly K-1s. But again, usually when we get the upfront docs and we don't have the application yet, we usually just kind of follow the 2-2-2 and get 2 months of those items.
Okay. Have underwriting requirements changed with the progression of the COVID-19, and how so?
Yeah, so that's kind of one of the biggest things that I would say has happened here over the past month. With regards to the underwriting changing, it really just depends on the product and program, and more specifically the lender. Because when we're talking VA, FHA, VA, it's you hear different lenders say, well, you need a 680 now to do this, and then maybe before it was a 620, or whatever the case is. It's not VA and FHA that have changed their guidelines. It is the lenders who are making their overlays on those guidelines, for the lender to feel comfortable doing with. So if VA, doesn't have a limit, or they allow a 580 or whatever the case is, most lenders now are going to be between 620 to 680. And with those, it's the biggest underwriting changes are going to come from the loans that have the most risk, whether that be a VA loan or an FHA loan, or whatever the case is. Again, those biggest changes are just going to depend on and come from those higher risk loans.
Okay. So I'm trying to manage this video thing all at the same time. I'm sorry, but if we basically what I understand is that if there is when you apply and for a loan to a lender and they say that you're not qualified, there are some other options. That's what I understand from your present.
Yeah, so I would definitely say any client that's out there looking at some of those products and maybe their credit score isn't the best, or maybe they don't have the right amount of whatever the case is, talk to another lender, get a second opinion. Just because if my minimum credit score is a 620 to do an FHA, Bank of America or another lender or a Wells, they could be a 680. And, if they tell the client you need a 680, they think they can't buy. But there is other options out there that they should check on.
As far as I remember, you work as a mortgage broker. Basically, you shop around to find the best option for your client. Is that
Yeah, so I work with Guaranteed Rate Affinity Mortgage, and we're actually a correspondent lender, but we still have the same options to where, when we find the best fit, best product, best program for the client, we do have different investors that we can shop around and see, who has the best rate. And every investor has different overlays or different guidelines for that product. So just because we can't get it through with one investor, we might get the loan through with another. So it does give us a few more options to look at when, I know some big banks I've worked at in the past, they usually only work with Fannie Mae or Freddie Mac. They don't give the option of being able to work with each one. And with that, Fannie and Freddie have different guidelines and different things they can or can't do. And in the past, I've lost a lot of loans just not having that ability to go to the other one.
okay?
So I think it does make it a little bit easier to search around.
Okay. I heard that you are offering something for the VA loans.
Yeah, so right now, not only are the VA loan rates just
We need some good news, please.
right, exactly. So, the VA rates right now are very, very good for purchase or refinancing. But right now, we're also waiving our VA lender fee, which saves about $1,290. So, it's not a free mortgage, but every little bit helps.
Definitely, I'll take it.
Yeah,
I don't mind
exactly.
taking that. So, my next question, we were talking about when do borrowers pay mortgage insurance? Are there any ways we can avoid it?
Yeah, so, without getting too much into all the little intricacies and options on that, most people just think that if they don't have 20% down, that they have to pay mortgage insurance. And that's the case a lot of times, but usually with mortgage insurance, you have three options. You can do borrower paid mortgage insurance where the borrower will pay it monthly. You can do lender paid mortgage insurance. And with that option, what happens is the lender will increase the rate a little bit on the interest rate, but then you don't pay the monthly mortgage insurance. And then the last option is doing like a single paid premium where at closing, you'll pay a one-time closing cost, but then you don't have the mortgage insurance for the rest of the life of the loan. So, just because you don't have the 20% down, if that's stopping you from buying because you don't want to have to pay that mortgage insurance and thinking it's a waste of money, we have different options to get around that. And as I think we talked about the other day, another option is if someone has 5% down, they can do an 80% first lien, a 15% second, and do 5% down. And that also avoids doing the mortgage insurance.
So, you're saying that there are some options to avoid it, and but you need to work with the buyer borrower. You have to work with the lender. Hold on just a second. I'm trying to mute. Yes. Okay.
Yeah. So again, there's definitely options for most scenarios. It's just once we get that application, which kind of everything starts from, then we can kind of work backwards and let the borrower know the options that are available and what looks to be the best option.
Okay, that's good. And my next question. I know that a lot of people took advantage of this forbearance option, delaying their mortgage payments. So
Right.
it is a good thing helping some people, but what are the consequences? So we need to be careful about it.
Yeah. So,
If I get refinance.
It's something that we're getting more clarification on here recently, but when it first came out, it sounded like a great idea. I mean, we don't have to pay our mortgage, so let's just hold off on a few months. Now that we're getting more into that and we're getting some information back from Fannie and Freddie on how they're going to treat that, if someone files for forbearance, but they've never missed a payment, we'll just have to verify that they haven't missed a payment and they're all caught up before we can do a loan with them. If they did file for forbearance and they've missed a few payments or missed a payment, we can still do a loan, but they're going to have to go back and make up the months that they miss. So if they didn't pay for 2 months, they're going to have to pay that difference that they are behind. We will have to source that they had those funds, those monies in their account, and then we can move forward with the new loan.
So basically, you're also checking out where that money comes from. Is that right?
Correct. Yep. So if they owe 3, 4, 5,000 in back mortgage, we'll have to document that they had those funds.
So, for instance, if they want to take advantage of this low interest rates, they come to you, say, "Oh, we would like to refinance this deal, this house." Then you look at it, you'll see that they did the forbearance. They took advantage of forbearance. You're saying them that, well, you have to pay whatever you owe before you get refinancing, right?
Correct. And, that's something that we can work on during the process. But, unfortunately, some people think that maybe they just won't say that they did or that they're in forbearance. And, there's no way around it. We'll find out.
So basically, even if it's a good, helpful tool, you need to be very careful with that kind of alternatives.
Yeah. I mean, it seems like you always pay for it somewhere or some way. So just, if you need it, great. A lot of people are going to take advantage of it, but just make sure that it's something you really need.
Well, nothing is free in life, so.
That is very true.
So what are I know you don't have any magic ball or anything, but what are your thoughts with regards to interest rates? Do you think they will go up, down, stable? I know you don't know, nobody knows the answer, but maybe you can share some insights with us.
I wish I had that crystal ball. Obviously the number one question I'm always asked is, again, it's just so hard to tell. Normally there's kind of, there's things that we follow or watch or pay attention that will give us an idea of which way the market's going to go, the 10-year treasury, and see where rates are heading. But it's stabilizing a little bit more now. Previously, when we were having those 1,000-point swings in the market, our markets team with where I work at, they said that it was 100 times crazier than anything during the financial crisis when it came to the rates and the coupon notes and everything that's involved with that. So, now that things are getting a little bit more stable, I guess I'll first say that any rate right now is a great rate. I've never, in almost 15 years of doing this, been locking people in at just under 3% on a 30-year fix. So I don't think you can find a bad rate right now. That being said, as we start to open up and the economy or the stock market continues to go up, usually our rates will follow that. Now, it may not be a straight climb up, but I think the trend will continue to go up unless we have another pullback in the market. And normally when you see something online on TV or online saying, rates are at all-time lows, that's usually, 3 days to a week behind, when they're finally coming out and saying, because the reports they get that stuff from is kind of like a weekly average. So it just, usually if you read that, 3-4 days ago you should have locked in.
Yeah. So what do you think? Is this a seller's market or buyer's market? What do you think about that right now? Do you think is it a good time to purchase something or?
Yeah, I mean, as far as, on my side with the rates and qualifying, the rates are great. You're not going to find a better time for rates to lock in. And the housing prices are strong. In our area, there's not too many areas that you're going to find that are, insulated or protected, against stuff like this that could come up. So with that, our rental market's strong. I just think that in this area, it's a good time.
It's a good time, you think? Okay. Well, thank you so much. I would like to close our meeting with a positive note. Recently, the Mortgage Bankers Association reported 9% rise in its purchase index for the week of ended May 22nd. That means loan application for new purchases have risen to pre-pandemic levels. Further to that, new home sales jumped to 623,000 units in April, which is a relatively healthy pace. Also, according to the Bright MLS, which is the source we use for marketing our properties, it shows that the numbers in April exceeded the numbers in 2019 April numbers. So that with this positive note, I would like to close our meeting. Thank you so much for all joining us today. Actually, before I go ahead with that, I would like to ask if anybody in the audience wants to have any questions. Just give me a second. Let me see if I have any questions here. I don't have any under the post. On the audience, do you guys have? I will unmute you. No, hold on. And Kamana, do you have any questions?
Yes, Dennis. How much is the exact interest rate for today?
Can you repeat one more time, Kamana?
How much is the exact interest rate for this week or today or whatever?
So what is the rate? Interest rates. Yeah, go ahead, Ryan. I know the answer, but
Yeah, I mean, you know, again, the interest rates, there's 1,000 different scenarios depending on what you're looking at, and we can definitely take this offline, because whether you're looking at a purchase or a refinance, and you know how much down payment or equity you have in, and what your credit score is, all make a big difference on what the rate's going to be. So, you know, if you want, you can pass your information to Denise, and I can send you an email with 5 or 6 things, quick bullet points, that if you provide me that information, I can give you the exact rate of what it looks like today.
So do you want to also give out your contact details, Ryan, to share with the audience?
Yeah, so the easiest way to get in touch with me is my cell phone, which is 402-202-8404. And my email is ryan.obermeyer@grarate.com. And to make things easier, I'm just going to put this right here for a second.
Perfect.
So I appreciate it, though. It was fun being here.
Thank you so much. Let's wrap this up. So thank you so much, Ryan, for joining us with this presentation. It was very valuable for us, and thank you so much for answering all our questions. And as Ryan said, you can reach him at 402-202-8404. And next week, we will have an interview with Ed Donofrio, the owner of Donofrio Inspection Company. We will discuss inspections during COVID-19 and HVAC maintenance. Stay tuned and follow our posts. If you need any help with the real estate purchase or valuation of your property or financing, you may give me a call at 571-271-6604 or check out our website, mylocationadvisors.com. Looking forward to seeing you all next week. And thank you, Ryan. Thank you so much. I really appreciate your time. Thank you. Bye-bye.